Hello, Culture Matters podcast. I'm so excited to introduce you to our guest. Before I do that, here's a quote just for this episode. Someone is sitting in the shade today because someone planted a tree a long time ago. Warren Buffett, our guest today, not only a student of old Warren, but a leader in the real estate space as far as investment, asset management, finding and understanding and underwriting deals, working with investors, not only an influencer in the world of investing, but someone I followed for some time. Just look them up, follow them. The one and only Veena Jetti, founder of Vive Funds, which we're going to learn today, is that to live long or to discriminate, analyze, and so on. If you're listening to this and you haven't invested in real estate, I challenge you to listen closely. And if you have, take a look at our guest after we're done. Over 20 years of experience in the business, and the last handful of years, done some massive deals, anywhere between the 50 million in 8 weeks or 67 million and these massive deals, but started from the bottom. And now her and her partners are here. So thanks for coming on the Culture Matters podcast.
Thank you for having me. I'm very excited to be here.
So first thing I'm curious about is did you envision yourself as real estate investor and a part of the industry young? Because I from my research I found out your mom actually invested in single family real estate. Is that correct?
Yeah, she did. She's a very successful single family investor. I'm the first in our family to have ever invested in multifamily. So
Wow.
it was like kind of the scale came with my generation versus my mom's. But to answer your question, very specifically, no. When I graduated from college, I graduated at 20 with my degree in finance.
Wow.
It's like, okay, Vina, now it's the perfect time for you to like come work with me. And, essentially nepotism at its finest, right? She's like, I'll show you the ropes and hand you this. And I was like, Mom, I'm an adult with a degree. I'm going to go out and do something totally revolutionary on my own. I don't need you, like the typical things that you do when you're 20 years old and you think you know everything. And so I went out into the corporate world. I graduated. So I graduated in 2007. So almost 20 years, not quite 20 years. But I graduated in '07, and this was right at the time when the entire world was like blowing up, the financial services space, like Lehman Brothers was collapsing, all
Yep.
these golden parachutes were coming out. So this was like a very tough time. Most of my classmates, when they graduated, did not have any job offers. I graduated with 7 job offers. And
Wow.
I had this sense of greatness before I even earned any stripes to give me that kind of confidence, right? And it's probably because my mother raised us to be confident and to go out into the world confidently. I'm very grateful for that.
Wow.
But it wasn't really experience. It wasn't really any success or failure. I just didn't have anything. So I got into the world. Accepted one of the job offers, and I ended up working in corporate real estate. And ultimately in 2012, I left Tishman Speyer, which was my last corporate gig, where I was on the management side for, I think it's now valued maybe at like 1.4 billion. So $1.4 billion. And at that time, it was maybe around $1 billion, but still a substantial sized asset. So I
Yep.
left there, started investing for myself, started in single family, just like my mom, because I didn't know that people like me could own multifamily. I thought it was for billionaires, not for Veena Jetties. But that's how I got started. And
Wow.
so, no, I never thought I was going to be a real estate investor, even though my mom had been such a great example. I mean, like, it's kind of boring when you're a kid, right? Like, she would take us to closings and walkthroughs and all of these like meetings with attorneys and realtors. And I'd be like, and I'm old, we didn't have iPads back then, so it was super boring. And
What was the inspiration to study finance?
so I'm Indian, and my parents were, they're like typical first generation Indians, right? They're like, do you want to be a doctor or an engineer?
So that's a real thing
Yeah,
culturally.
for sure. I mean, at least in my friend circle, and I hate to like paint with such a broad brush because there's like
Yeah.
over 1 billion people in India, but American immigrants that American children of immigrants from India, like there is a natural emphasis on education. So they were like, you can be a doctor or an engineer or maybe a lawyer. And I was like, okay. So I'm the black sheep of my family. Every person in my family on my side, they're all engineers. Every single
Wow.
My sister and I are the only two that are not engineers, we're not doctors, and we don't have beyond a bachelor's degree. Everyone else in my family has at least a master's or a doctorate, and
Wow.
they're all engineers or doctors. In my husband's family, everybody is mostly a physician or an engineer. Like they have a minority amount of engineers, but like this is, and my brother-in-law is also in finance. So my brother-in-law, my sister, and I were like the three black sheep across the family.
And
And
she works with you, correct?
my sister works with me. She is my partner.
Wow.
So
Amazing.
yeah, I went to school for finance. I started as an econ major and realized like I really didn't like economics that much. It wasn't
Did you
interesting.
think it would correlate with money at first? Because I thought that too early on. Oh, okay. You just had an interest in it.
No, yeah, you know what I was going
I
to
got
college.
Thomas Sowell's right there. I mean, I got some
Oh, there's
other
yeah.
economists in the house too. I don't want to sway the just one way, but he's a popularizer of economics.
Yeah, it just I didn't care about it, to be quite frank. Like I didn't care about finance either, to be
Wow.
honest. I cared about like socializing and meeting people and building relationships and networks, and that's
Hmm.
honestly, that's like been largely how I've been successful. It's not the finance degree. It's all the other aspects that come with going to college, like time management and networking and learning how to balance all of these responsibilities without the full responsibility of being a full grown adult in the real world. Um, so it's almost like a safety net in some kind of way. And I ended up choosing finance because my parents were not willing to pay for a degree that was not a technical degree.
Wow.
So they were okay with economics. And then I was like, oh, I hate this. So then I thought maybe accounting, but it turns out I hated that more than I hated economics. So then I went to finance and I was like, okay, this is good enough. So I have a finance degree. My emphasis was in marketing. I really enjoyed marketing. In hindsight, I wish I would have done more marketing classes than I actually did. But the vast majority of what I've learned has happened over the course of my career, not so much from like learning at school.
How important is the marketing aspect in building and sustaining um, value add for your investor partners as it relates to actually starting and managing a fund in the real estate asset class?
Yeah, I love that question. I don't think I've ever been asked that question. So thank you for allowing me to explore this. So I'm going to think out loud as I respond to this. I think the marketing aspect is very important, right? Because people have to know what you're doing in order to be able to partner with you. Do I think it's something I could have only learned in school? Obviously not, because I just have an emphasis. I don't have a degree in marketing. So I have some basis in it, but not a complete basis in it. But it has come in handy, not just with investors, but also with performance of the assets, being able to understand how we can better market our assets, how we can better market when we're selling, how we can better market ourselves when we're trying to acquire and win a tough deal. So it comes into a lot of aspects of business that I
Mm.
don't think I recognized until I was in this world. But I also have a very different view on education today than I did growing up, right? Like when I was growing up, it wasn't if I'm going to college, it was where am I going to
Wow.
college and which of these narrowly selected fields am I going into? But today, college is becoming less and less valuable. Like my kids, yes, I want them to go to college because I want them to have the experience of college. But I do think that by the time my kids are old enough to go away to college, it is a luxury to be able to attend a school which is going to cost hundreds of thousands of dollars for them to get whatever degree that they get. And I want them to have the experience because it was awesome. It was so fun. I made a lot of really great
Mm.
friends, relationships there. My mindset coach today, Rosie Noel, she was my roommate in college, right? Like
No
that's
way. Wow.
she might have been the single most important connection I made in college. And she might have been the single most important connection I made in college, not just from a personal perspective, but from a business perspective, because I think she's truly added millions of dollars to my net worth because I
Wow.
worked with her.
What are some of the motivations of the limited partners that participate in this investment? And this is alternative investments. The asset class is real estate for our listeners that aren't familiar. What are some of the motivations for them to, the reason I ask this is I thought of education, right? The skyrocketing costs of education. But from your personal relationships you built with so many of your partners in that, what are some of their motivations to explore that asset class? Like if they're not familiar with it, they've never been involved in it.
Yeah, so generally our investors, like our LPs, limited partners, are the ones that have done something really amazing in whatever their field is, right? Like they're doctors, they're lawyers, they're engineers, they're entrepreneurs, they're real estate investors, whatever they do, they just do it with excellence, but they don't have the bandwidth, because
Mm.
I don't want to say capability, because our investors are very smart individuals. If they put their attention and effort into doing this, they could run a deal. They just, it's a bandwidth issue, right? Like if you
Mm.
are a neurosurgeon, where are you going to find the time to spend 100 hours a week doing what I spend 100 hours a week on? You're not. And so the reality is, the neurosurgeon has trained for decades to be perfect at what she or he does, right? And so when she comes to me and she says, "Hey, I am a busy neurosurgeon and I'm saving lives and doing important work, but I also want to have the tax benefit and the efficiency and the inflationary hedge of real estate in my portfolio." That's where I come in and that's where I can solve this problem, because we are a very tax efficient investment for any of our LPs because we produce negative K1s. Secondly, we provide passive income. So it truly is passive income. When we talk about real estate investing, everyone talks about mailbox money. This is not mailbox money if you are the sponsor on a deal. It's not. Look, I have gray hairs, I have wrinkles under my eyes, I lose
Yeah,
sleep.
what's a sponsor for those that don't even know that
Yes.
term?
Sponsor, thank you. Sponsor is a general partner or the person that is running the deal and making the active decisions A to Z on the deal. So I'm also an LP into our deals. I'm also a limited partner because I invest into our deals, but I am the sponsor or the active member.
Hmm. And so that you find that many of those that have invested into this asset class through you as sponsor, they are experts at what they do. But
Absolutely.
and that's a consequence of the time, the education, the experience, and that's what you're offering them.
Yeah, like look, if you spent 4 years in med school and then 3 to 10 years in residency and fellowship,
Yeah.
you don't want to go and do all the things that I'm doing because you're already so heavily invested in what you're doing, right? So unless you're planning to leave medicine as a whole, which maybe you are, and that's like the exception, certainly not the rule, it doesn't make sense for you to try to do this because you just are never going to have
Mm.
as much information or capability as I will when I can dedicate 100 hours a week to this and you can dedicate two.
What are some of the mistakes that are so we have listeners that may be in their first or second deal and they have a full-time job or something. What are some of the mistakes they could be making right now and not even realizing it that you've likely earlier in your career made when you were the entrepreneur?
Yeah, so for LPs or limited partners, when they're trying to invest into a deal, the first mistake I see, and I tell investors this when I see them making it, they will try to invest in a deal because someone they know invested in it. Okay, this is personal finance, this is your personal portfolio. I as a sponsor or a general partner might put a deal in front of you that's like not really a good fit for you because our investors tend to be ultra conservative and our underwriting reflects what our investors ask of us, which is conservative underwriting. So I'm not going to put a deal in front of you and be like, "Hey, we're going to 10x your money in 2 months." Like it's just not realistic, but we're not willing to take on the risk that you would need to do something that crazy, right? And that's obviously an extreme example, but we're going to mark to market and we're going to give you conservative outlook. So if you are somebody that is a conservative investor and you care about asset protection first, then we might be a good fit for you, right? But If you are somebody that is young, very aggressive, you don't care about asset protection because you're not at that point in your trajectory, then you might need a sponsor who is willing to go and put it all on black in Vegas and give you this super crazy phenomenal return. I I don't know, I can't make that decision for you. So that's one is like understanding the alignment between your sponsor and yourself. The second is making sure that you are looking at who your sponsor is and understanding what their business plan is. Do they have the experience to be able to navigate through this? The biggest gap I see in sophistication in LPs is the expectations of the market should be set by the market, not by what a sponsor tells you they're going to do, right?
Mm,
What I mean by that, let's say you have a sponsor, okay? We'll call him John Doe. Okay, John Doe comes to you and says, "Hey Jay, I have this really great deal. We're going to deliver you a 25% IRR and 10% cash on cash during the whole period." Okay, that sounds like a pretty good return. A lot of unsophisticated investors will look at that and go, amazing. I'm going to get 25% on my money. And they start making these calculations. If I put 100K in, I'm going to get 25% IRR. And let's say it's a 2-year hold, I'm going to make $150,000 from this deal. That is a pro forma projection. So
mm,
what'll happen then is that same investor, you in this scenario, right? You'll say, "Hey, Veena, what do you have to offer?" And I'm going to say, "Hey, look, we do a 12 to 15% IRR projection. That's our projection on ours." And you're going to go, "Well, if I go invest with John Doe, I'm going to get 25%." And I'll go, "Yes, maybe, maybe not. These are risk adjusted returns. The higher the potential return, the higher the potential risk." So these are two sides of the same coin.
mm,
And if that is something that's comfortable for you, go for it. But if, let's say, they're offering an identical project to what I have and they're projecting 25%, they're just telling you what they want to be true. And these are not realistic projections. What I'm telling you is realistically where you're going to end up. And maybe I'll deliver a little higher. That would be my goal, under promise, over deliver. But I'm not going to tell you 25% because I know that I can't meet that expectation because that's not where the market is today. And this is
mm,
how, like, Starwood, Blackstone, all of these big funds, they don't mark to what pro forma said at the time you invested. They mark to market and say, okay, we thought this is what we were going to do. And that would have been great. But the market is now here. What are other managers doing? What is the S&P 500 doing? How are you performing against those factors? And
mm.
that's how we determine the strength of a manager.
Wow. What are the if you had almost like a list of attributes that make a really poor LP?
Ah,
Like
oh,
someone that's listening that they might be interviewing right now thinking like this is something I want to get involved in with
yeah.
my capital, but they're not as ready as they think they are.
So
And they're
I
not
think,
going to be a great partner. If you know what
yeah,
I'm saying, the attributes
yes.
or their tendencies or
Yeah, it's funny because I do have like a very small blacklist of investors that we won't accept into our deals. It took me a really long time to create that because when you first start out, no one wants to give you money. So
yeah,
you're
yeah,
willing to take all the money, right? There's very few exceptions to what you'll say no to because
yeah.
you just are desperate. You're very thirsty, right? As you get more experience, as you gain more trust, more track record, more credibility, that necessity comes down. And so, generally, if an LP is listening, right? What I found to be true is the smaller the check size, the higher the administrative costs of managing that investor. And that's just objectively true, right? Like if you write a $25,000 check, it still costs me whatever, 100, $200 to get a K1 produced. Whether you write me $100 check or $100 million check, that doesn't change, right? So administratively, it's very expensive to take smaller checks. So if you're a GP or a sponsor listening, I highly recommend you don't take those smaller checks. The second thing that is really important for me at this point in my career is I don't want anyone's last dollar, because if I have your last dollar, you are going to be anxious about it. And it's always the smaller check writers that need more explanation and
Yep.
more in the weeds data. And so what happens is you get into this cycle where you have someone who really doesn't want to be invested and you've now convinced them to invest. I don't ever want to convince anyone to invest. I want you to be coming to me and asking me to invest, because if I convince you, here's what I found to be true time and time and time again. Let's say I come to you and say, hey, Jay, this is a great deal. I convince you. You're like, okay, fine, I'm going to do it. And I know I'm convincing you, but I need the money. So I do it anyway, right? And then you come into the deal and let's say you write me a $50,000 check. Okay. And then let's say the market happens. Let's say there is an administrative change, which obviously we're right in the middle of a turnover, right?
Yep.
And there's a lot of uncertainty. There's a lot of volatility. Interest rates have gone up. No one knew interest rates were going to go up as sharply as they did. Interest rates have started coming down, and it's still not changing the pricing of the market. Cap rates are now maybe starting to compress in certain areas. So all of these things happen. I am going to be getting a call or an email from you every couple months, every month, every couple months, every quarter, asking me for personalized updates on the asset. Now, you are my investor. I have a responsibility to you to provide you with information. We do a great job of communicating with our investors. That is something that we do better than anybody in the industry. And I'm an LP in many deals with other sponsors.
Mm.
You will get monthly communication from me. You will get quarterly financials. If something is not going as planned, you will see increased communication from me. If there is something that is very important, we will pick up the phone and call our investors. Like, we communicate, communicate, communicate. And then you're going to come to me, you're going to say, Veena, I read the monthly update, but I need more. And then you're going to call me, and then I'm going to spend 30 minutes or however long talking you through the anxieties that you're facing about the risk that this capital now has. And now that's 30 minutes or an hour times 100 investors, 10 investors, 15, however many investors that are in your same position or like thought frame, right? So now I've spent, call it 10 hours this month taking those calls. So now it's a self-fulfilling prophecy where that 10 hours would have been much better spent. The higher and better use of my time is not in explaining the things that I've already emailed you just for your comfort because you want to hear it from me. And I love and appreciate that I have that kind of relationship with our investors. But now that 10 hours, I can't make more time. I'm good. I'm not that good, right? And
Oh,
so
that's
now
great.
that
That's a
10
paradox. I need you to actually make the money, not talk to me like a therapist.
Exactly. And so now that 10 hours, I could have spent it doing market research, making another connection to a new source of capital, getting better data, learning a new AI tool, implementing something different, following up on something with property management. But now that ability gets diminished, right? And so it's like this cyclical issue. Like, you're worried about your money, so you're reaching out to me. And by reaching out to me, I have to calm those fears and I have to give you pertinent data and information. But now that prevents me from being able to manage your money, which means you're now concerned about your money being managed. And it's like this vicious cycle. So, as an LP, what I would say is don't invest your last dollar. It's not going to be worth it for you. It's definitely not going to be worth it for your sponsor. Secondly, once you're invested in the deal, you should have so much comfort going into the deal that you know and trust that your sponsor or your general partner on the deal is going to actually make good decisions with the
Mm.
information that they have. If you don't think that that's possible, don't invest.
More so than as a financial asset or a tool, partnering with the right fund, as opposed to you becoming their financial advisor
Yeah, I mean, and I
or
simply
therapist, financial therapist.
Yeah, I tell investors this, I'm not licensed in anything, right? Like, I'm not a financial advisor, I'm not a CPA, I'm not a lawyer, I'm not your doctor, I'm not a therapist. I can't provide these services. There are entire fields that are dedicated to this, so you need those people. And like, whenever I have someone who asks me for financial advice on whether they should invest, I always tell them, I am very biased in this.
Mm.
Obviously, I love this deal or I wouldn't have put it in front of you. So you shouldn't be asking me if this is a good deal or not. If I didn't think it was a good deal, we wouldn't be having a conversation. But what you should be doing is going to your business advisors, going to your financial advisors, and asking them if this is a good deal for you to invest into, because they're paid for that. That's their role.
If I understand correctly, that first, 200 units, Class B, it was in Texas.
Yeah.
What worked about that first investment that your company made in it in its newer, or no, that was, yeah, company, what, two companies ago? That was some, so yeah, what made it successful?
Um, Honestly, a big part of it was timing, right? Like it's sometimes better to be lucky than good. We were able to buy when cap rates weren't so compressed, debt was still very well priced. It was in Dallas, so it was in like one of the up and coming hottest markets in the country, and pricing was very reasonable. We bought 200 units, 15.9 million.
Yep.
You are not finding Class B assets for 15.9 million for 200 doors. Period. End of story. I don't care how good of a deal it is. Even a distressed asset. I actually just got a distressed asset that came across my desk 2 weeks ago in Dallas. It was 275 doors. They wanted north of $60 million. And this is an asset coming out of foreclosure. Occupancy is sub stabilization, which is 90%. So less than 90% was like 75%. So
Wow.
this is not even a turnkey asset like the one we had bought back when we bought this 200 doors. That was like a decade ago or so. It was not even the same scenario, and it is significantly higher price per door. And when you're in, when you're looking in hindsight, it's really easy to see what went well, what you should have done differently, right? Like investing in hindsight is the easiest thing. Investing it with foresight is very tough to do because there's a lot of factors that affect it. But that deal specifically, so we bought it for 15.9 million. In 15 months, we were able to add a supplemental because we had been able to push the NOI and add value and force appreciation on the asset so well that we were able to do a supplemental, and we were able to pull out 40% of investor capital. So that means if you invested 100K into that deal, by month 15, I'd given you back $40,000 in addition to the monthly distributions I was making. So you already were de-risked significantly by month 15 in that asset. And then after 3 years and 3 months total of holding it, from the time we bought it, was the time we sold it. And we sold it for around 24 million. And that ended up with investors getting like a 25% IRR. It was crazy. It was phenomenal, the return that
Mm.
we got. Um, so that was, there was a lot of things, right? It was the market, it was the location, it was the asset class, it was the potential of the asset, it was the execution of the business plan. There were so many things that worked in our favor on that asset. The hardest part of that deal for us was closing the capital raise because no one wanted to believe in us when it was our
Mm.
first deal we were doing outside of like a corporate structure.
How did you believe in yourself? We have a lot of entrepreneurs listening to this.
I didn't. I cried myself to sleep every night for 6 weeks straight. It took one night I was bawling at like 2 a.m. because I thought I devastated my family. I thought I ruined my family.
Wow.
And my husband was the one who was like, babe, if anybody could do this, it's you. And I was like, but what if I can't? It's like, there's only one way to find out. And it's like, okay. And so, obviously he ended up being right. But I'll tell you, like, the amount of self-doubt, and that hasn't ever gone away for me, honestly. I still have a healthy fear whenever I'm doing something because I'm always trying to level up and grow. And
Mm.
I think that our investors rely on me to do that, right? Like, as AI has gotten more and more prevalent, like, it's uncomfortable for me to have to learn AI now, right? Like, it's not something I grew up with. It's like my kids
Yep.
will grow up feeling very comfortable and used to AI. I'm an elder millennial. It wasn't part of our generation growing up. It's new for us. So I'm uncomfortable. I'm learning about this, but I firmly believe that this is in the best interest of our investors and our
Mm.
business to understand and learn where AI is, what the future of AI is, and how we can implement it to maximize our outcomes for our investors.
Is AI having some type of relationship around understanding rents and how they fluctuate in the marketplace? Because rents have to be a big part of how
Yeah,
one actually
thanks.
gets a return on these investments.
Absolutely, yes. One is rent pricing, right? Like, how can AI step in and help with rent pricing? How can AI help us underwrite and predict better what's going to happen from large data sets, right? How can we identify issues before they become major issues? So, for example, there are AI softwares now that will go in and will they'll go in and they will aggregate all of your repair and maintenance data, and it can say, hey, unit 104 probably needs a new plumbing fixture
Wow.
because it keeps leaking and this is a good time. It can help you with decision logic around that, right? It can tell you that there's a problem before you even recognize that there's a problem because you don't have the same level of data analysis that AI does, right? We use AI for collections. So on our asset, we have Elise who calls, it's an AI that calls our tenants to remind them that rent is due. It's helped us increase our collection ability. Um,
Wow. Wow. That's intense.
Oh, yeah. I mean, and it's funny, like, we'll have residents that walk into the office and they'll go, "Oh, is Elise in the office?" And we're like, "Oh, she doesn't work from here." And they're like, "Oh, okay, well, tell her I said hi." Like, she builds a really great rapport. And so these are
She'll
tools
be in in your closet soon, coming out and say, "Pay."
basically, right?
That's
Yeah,
awesome.
it's
Wow.
incredible what AI can do. And then for our investors, right, we can provide better data. We can give them better analysis. We can leverage AI to create better reporting for them, better transparency. There's like so many things that we do in the core of our business. And that doesn't even touch on, in our capital raises, being able to manage our capital better, being able to manage investor experience better, being able to market better, advertise. Like there's just so many things we can do that it makes sense for us to double down because AI is the future. Anybody who thinks it's not, they're just wrong. And no one can convince me otherwise. AI
Mm.
is without question the future of how we will do most things. And it will disrupt most fields, if not all fields, in some way.
Why did you pick the word Vive?
Oh, yeah. Okay, so I am notoriously bad at naming anything. My daughters, so I have twin daughters. For like the first 3 days of their life, they didn't have a name. We just called them twin A and twin B because I like couldn't commit to a name and I'm not confident in naming anything. And so when I rolled out this company, it was just me at the time. My sister's now my partner, but she wasn't actively involved in the rollout, and we hadn't decided to partner until after I had rolled out the company. So I was like, all right, Veena, what can you come up with that isn't taken? Don't do like I did, but I thought it was easy to pronounce because I thought everyone would be like, "Oh yeah, it's Vive. It rhymes with five. It's easy." No, no, people will even my dad will be like Vive or V. And I'm like, no, they want it to be super fancy. So VI is the first two letters of my daughter Vivana's name. VE is
Wow.
the first two letters of my daughter Via's name. And so Via and Vivana, I took the first two letters, put them together, and that's how we got Vive Funds.
That is so profound to me because I was doing research and I was thinking like, wow, because I it says like long lasting.
Yeah.
In Hindu, it's means a different to be able to discern
Yes.
or like analyze. And I'm like, and it's like, no, I just asked. It's like, oh, it's your daughter's name. It's like, well, it's a
Yes.
pretty profound name for what you're doing.
Well, thank you.
Is
And
that a
yeah,
coincidence or is that like fate or something or
it was
is it culture?
a happy
Wow.
accident. Because after I decided on the name, I did the research too to make sure it didn't mean like some
Wow.
horrible thing. It mostly means like breathing life into something, giving life to something. Um, and then there's like revive, which is bringing life back to something. Um, so it
Wow.
was all around life, and my daughters are my life, so it feels really fitting. So I think it was a happy accident, but I wouldn't have chosen the name if it meant something that was not in alignment.
How important has community been in building this company? Yeah, because I see you have a community. There's a
Yeah.
Facebook group. There
Yeah.
looks like a strategic alliance with Pace, who we haven't had on the show, but have seen his stuff out there in the world.
Yeah, I I didn't know what I was missing until I discovered the power of community. That's easily the single biggest mistake I've made is not recognizing the value of having a community, a like-minded community around you. Because there have been so many times that I've gone through really challenging things that felt challenging to me that I now, in hindsight, can see that if I had a community around me, I would have been able to navigate it so much better, so much easier, with less pain than I did. Because what happens in a community of like minded investors is you get a mindset, you get encouragement, you get hope, you get camaraderie when things are hard. You get support in the things you need. You get tools. I can now leverage everybody in my community. I can go to them and say, "Hey, I have this problem." And this has happened many times. So actually, I'll give you a great example. So on my coaching call, so I do a weekly coaching call, right? And on Tuesday, I did a call and, I want to do things differently. A lot of these communities are led by men, which I think is just a different form of leadership than when women lead.
Yeah.
And a lot of it is there's a lot of undertone of like toxic masculinity in a lot of these communities. And there's a lot of stigma around certain things, like mental health being one of them. And so I see this as a very unique and special opportunity for me to be able to address things that I find important that I would have liked to have had when I first started. And so I got on my coaching call on Tuesday, this was just a couple days ago, and I said, before we get into today's topic, which was we're doing like a deal review, a case study. Before we get into that, I just want to share with you guys something that I'm going through personally at this moment, which is still true as we're having this podcast, but I am burnt out. And this is the very first time in my whole life I've ever experienced burnout. And I didn't know
Mm.
this was like a real thing. I thought burnout was like, when someone's like, "Oh, I was so depressed that the Bears didn't win." Like I was sad or upset or disappointed, but they say depressed. I thought that's what people meant when they said like, "Oh, I have burnout." I'm like, "Oh yeah, I'm tired too." I get that. But it's not. It's different. And this is different than anything I've ever experienced. And it's because I worked with Rosie that I was actually able to identify it before it got too far. Uh,
Mm.
but I brought it up to the community and I lead with vulnerability a lot in our community because I think that is how you create trust with leadership is when leaders can be vulnerable. And so I share this in the community and I said, I put together a list of resources that I've been using to help me overcome this, including like mental health resources and like the suicide prevention hotline, because what I've learned is burnout can a lot of times lead to depression. And I'm not an expert, but I did put together all of like these mental health resources that people can find experts who can help them through this because I thought, man, no one talks about burnout. All we hear in a lot of these communities is grind culture and like, you're not working hard enough. You're weak if you don't do this. Why aren't you waking up at 4 a.m. and starting in an ice bath? Like, I don't want to do that. That does not sound good to me. If that's you, like do you,
Yeah,
but like
yeah.
has to be some room for other things, right? And so all of this to say, I put this out there, I was vulnerable. It was intensely vulnerable for me to share this because it does feel like a weakness given all the messaging I get around this so often, even from like my friends and other people who lead
Mm.
community. And so I put it out there. And then immediately after, I go to my Instagram, which is where I respond to all my own messages. And I had all these messages from community members that were like, "Thank you for sharing that.
I love it.
It's so validating to know that you go through hard things or things are not always easy for you and you don't have it all figured out." I got messages of, "Here are all these resources that I used when I faced burnout." One of my community members, Morgan, he connected me to his coach that does like tapping. I don't know if you know what this is. It's new for me. So
No.
apparently you like tap different parts of your body as you're saying certain things and it activates like different hemispheres in your brain and it helps you unlock things better. I've never done it. I don't know if it works. He swears by it. So I'm like, all right, I'm willing to try it. So now next week I have an appointment with her to see if that's something that can help me. But that's a resource I never would have had if I didn't have community. And if I didn't have a community where I could show up authentically and vulnerably. Because if I'd never said this to anybody, I would have been suffering in silence and excuse me,
Bless you.
I would have been suffering in silence and they wouldn't have been able to help me through this or give me resources to help me.
And one interesting thing on that is how, how do we, what if the ice bath is actually an anesthetic as a consequence of the burnout?
It absolutely could.
Yeah, I'm just saying that was one thing that came to my mind is that, like the example, whatever that is, it could very well easily be someone doing something as a consequence of them not needing the help that they need, that now they're getting everybody around them to do something that may or may not be helpful. So I
For
thought
sure.
that you bring up a good point about the idea of just being real about who you are and where you're
Absolutely. I love that you're saying that because that is exactly the reason why I believe so strongly in having diversity in anything we do. Because That like,
Yeah.
doing an ice bath, like, Jen Gottlieb, okay, she's one of my best friends, she's incredible. She does an ice bath every single Sunday, and
Wow.
she is better for it, right? She loves it, it motivates her, it makes her feel accomplished and good and inspired. Amazing, like, that is what she should be doing. Does that mean that that's what I should be doing? No, because that's not the right fit for me, that's the right fit for her. Now, for me, what I do might be different, right? It might be snuggling up on the couch and watching a movie, and that's restorative for me with my family, right? Or going on a vacation or doing whatever it is, right? Like maybe restorative for you is to play golf. I don't know. But that's why diversity of perspective in leadership is so important because when I lead by saying, hey, this is what I'm doing to address my burnout, and
Mm,
you show up and you say, oh, okay, I like that for you. For me, that wouldn't work because, like, for me, one of the things I do to address burnout is I socialize with a close friend and I meet them for like a meal or a drink or just like to hang out. Like that is invigorating for me. You might be a total introvert and you're like, that sounds awful. I have to be on and around people for more time than I normally would. No, I don't want to do that. So if that's your position, great, then this is not the solution for you. But my job as a leader
mm.
is to create space for differing perspectives and differing realities. So while this works for me, I need to be able to recognize and emphasize that it may or may not work for me for you. If it does, amazing, please use it. If it doesn't, then let's try other things. And that's where having Jen, right? Because she could say, oh, this is what works for me. And then you go try that and you're like, Veena, that was the thing I needed. And that's why having that diversity of perspective is important because it allows there to be room for different iterations that wouldn't be there otherwise.
What's worked in building your community to increase the likelihood of diversity of thought, diversity of perspective?
I love this question. I have been reflecting on this pretty heavily. Like this has been a big New Year reflection for me.
Mm,
One of the things that I think is really important in any community culture, right? Culture matters. To build the culture is leadership starts at the top. How you show up when you are a leader informs how everybody else is given permission to show up. So that's number one. Number two, this is one of our core values, and I don't shy away from this discussion. I know like DEI is somehow like a bad word in today's environment. And I think in some contexts and in extreme contexts, anything in extreme is not good, right? But without recognizing that diversity actually leads to better financial outcomes, I think that's a big blind spot for a lot of people because people hear the word diversity and immediately shut down. But let's like
mm.
go deeper than that and ask why is diversity important? It's important because the more perspective you can gain, the better you can understand your audience or the people you are serving or your investors or your clients or your customers, right? So when you can better understand that, you can also innovate better. And innovation is what drives growth. And if you look, women-led companies do more with less money. Like look to Silicon Valley. Women get less than
Mm.
2% of VC funding. If you give a woman money, okay, and these are the metrics, these are not an opinion. This is what data has studies have consistently shown this. When you give women money, they do more and produce more by every metric that an investor cares about with less resources. So, for example, every dollar you give to a mail run company, they will produce about 31 cents in revenue for that, okay? Or in profit for that. Women, by contrast, will produce about 78 cents. And there's a great book about this, by the way. It's called Invisible Women. Phenomenal book. I'm in the middle of it still.
Yeah, that's like 150% more.
Yeah, they do it a little bit more than double, right?
Yeah,
So if
yeah.
you really care about the dollars, then you would do this. And also, last year, for the first time ever, it has been reported that most people prefer to work for women in leadership.
What
So,
was that book called?
Invisible Women by Carolina Perez. Caroline or Carolina Perez. Um,
Go
yeah.
on. Yeah.
So, we have both the behavioral and the technical side saying that women are powerful leaders. Yet, when you look to Fortune 500 companies, they are a small minority of CEOs and in those companies. So all that to say, diversity is important. It, I'm not talking about diversity for the sake of diversity, right? Like, I think that's where we get a lot of pushback. And I agree with that, right? Like, I'm not going to hire an unqualified woman just because she's a woman. Diversity at its core as a concept is the belief that women are also qualified to do this job. And you should be hiring for who's most qualified first. And then secondly, if you have multiple candidates that are all things being equal, then having diversity represented in the team is really important. And I think people hear like, oh, that means we don't want white men. No, that wouldn't be diverse either. We need that voice too. Like, these are all important voices. So what I'm saying is like, when I see a board and someone's asking me for an investment and I see 100% of the board is white men, that doesn't work for me, because you have 31% of a greater population representing 100% of your board. You're going to have blind spots. You are not going to be able to see things that you would be able to see with a more diverse board or more diverse perspective. So all that to say, community, to get diversity within the community, it's how leadership shows up. It's the culture you create and you lead with and you exemplify. It's one thing for me to say, act with integrity, and then go and do something that's not in integrity. It's another thing when I say act with integrity and I show up with integrity consistently, then other people feel compelled to do that. And the other thing I
Mm.
really thought about a lot is,
Mm.
uh, there's a difference between being powerful, like a person with power, and a powerful leader. They're two different things. A person with power is someone who can coerce, manipulate, or force an outcome, right? I have that power in our community. I can force pretty much any outcome that I choose because it's a community that I created and I am the one that gets to decide what we do and move forward, right? That's power. Leadership is when you can speak truth to power, right? And that is the mark of the community. So as you are listening to this, right, if you're wondering if someone is a good leader or they just have power, the question is can you speak truth to power? In our community, any of our members are welcome. I encourage them to tell me where I get it wrong, where I am missing the mark, what I'm not considering, where my blind spots are, because I have a lot of them. I'm a human being. I have my own lived experience. And until you provide me the opportunity to understand more or see more from a different perspective, I might not ever see it. And so when you can speak truth to power, and what that means is you can come to me and you can say, Veena, you said ABC. I see it differently. I just don't think that that's accurate. If my response to you is, well, you're wrong, or I shame you, or I ostracize you, or I kick you out of the community and you have to worry about retribution or retaliation from me because you have brought up something that does not align with what I've said or thought or believed, that is just power. As a leader, when you say this to me, I'm going to say, oh my gosh, tell me more about that, right? And this is emotional intelligence. This is leading with curiosity. So anytime someone says something dissenting to me, and it's not done in an abrasive way or a way just to incite argument or violence, right? I'm going to say, hey, thank you for telling me about this. Give me more information. Where can I learn more about your perspective? How can I understand this better? Because what it does is one of two things. Either it forces me to make a better argument, right? So let's say I make a statement in our community and I say, orange is the best color, period. There's no exceptions for that. And then Jay, you come to me and you say, Veena, I appreciate that you think orange is the best color, but it's not. It's actually blue, because blue triggers serenity and tranquility, and blue is the color of water and the color of the sky and things in nature. And that's why I think blue might be a better color than orange. Instead of me going, anybody who thinks that is dumb, or you can't be in this community, or blue is the worst color
Mm.
and you're stupid for thinking that, right? Like, that's one response. And that's me using my position of power to bully you into feeling some kind of way or believing what I believe, right? And so you might retreat and you might be like, okay, well, I guess orange really is the best, but you don't believe it. You don't actually think that. Whereas for me, it does when I lead with curiosity and say, hey, tell me more about this. What evidence do you have? Why do you think blue is the best? What's your experience that made blue the best? And I listen with an open mind. What it does for me is it makes me better. And here's how it makes me better. One of two things will happen. The first thing is I'm going to say, you know what? I hadn't considered that before. Maybe blue really can be the better color. And I changed my position because I'm a human. I have a growth mindset. I'm totally open to learning. I'm totally open to being wrong. I'm totally open to being better from more knowledge. So that's the first thing that could happen is that I change my mind. I go, or the second outcome is I strengthen my position, right? So I say, okay, I heard that and I appreciate that. But what he's missing is that orange is the color of fire, and fire can sustain life because it was the single thing that we needed to evolve as humans is the cavemen and cavewomen discovering fire, right? So then I get stronger and it forces me to make better arguments about why I think orange is better. It's still respectful. We can disagree. We can agree to disagree. I can understand your point though. And understanding is what we really need. It's not agreement, it's understanding. And so one of those two things will happen. Or the third thing that could happen is we come to the conclusion that, wait, we said blue and orange, but we're leaving green completely out of this scenario. And green is the color of the terrain and the color of money. And like, I'm making all of this up, obviously. It's very hard to do about colors, but then maybe a third option emerges that we think collectively is better. So there's just like, there's so much room for fluidity and change. But I think that's the difference between being a powerful leader and being a person with power is it all is predicated on whether someone who is in a subordinate position or a perceived subordinate position, can they speak truth to power? And if they cannot do that for
Mm.
fear of what the outcome or the result of that'll be, that's not really leadership. That's just power.
Amen. If you're welcome back anytime. I want to be respectful of the time. If our listeners want to connect with you and speak truth to power to their bank accounts,
I love it.
build their wealth,
Yes.
invest in alternatives,
Yep.
uh, the real estate asset class, fastest, best way to get in contact with you and really apply for that
Yeah. So
opportunity.
if you want to learn how to invest as a passive investor with us, you can go to vivefunds.com, VIVEFUNDS.com. We have an investor portal. You can see our offerings there. We are open to accredited investors only, so just a point, but anybody can look at our investor portal. Um, if you want to learn how to invest and be a sponsor or general partner, I have a free Facebook group called Mastering Multifamily with Veena Jetti. Or you can go to multimastermind.com, schedule a call with my team. And if you want to just connect with me, follow me on Instagram, TikTok, LinkedIn. I'm on all the social media platforms as Veena Jetti, VEENAJETTI. And I respond to all of my own Instagram messages. So if you want to actually DM or ask me a question, follow me there, shoot me a message, and I'll respond back.
Veena, thanks so much for this. If you're listening to this, share this with a friend that needs to take a second look at not only their finances, but their leadership and their culture and communities and start thinking in the future, right? Because all of us might be able to plant a tree that someday some future generations are in the shade. Leave us a review on the Culture Matters podcast, and we will see you next time. Thanks so much.
Bye.